Crude is on the boil again. Brent crude hitting nearly $87 a barrel, the highest actually in 7 years. And this will have economists and policy makers truly worried, especially for India, where high crude prices translates into a higher import bill and should ordinarily also translate into higher prices on the pump for you and me on petrol and diesel. But interestingly enough, we haven't seen a big spike at all in petrol and diesel prices on the retail level for the last several days. In fact, since early December, there have been no increases in petrol and diesel prices. This, of course, could have a lot of reasons for it, but the most obvious one staring at us in the face is the fact that there are 5 state elections coming up soon, and this may have influenced that decision to hit the pause button by OMCs. But we need to go into the story into a little bit of depth, because even if you put a hold on crude prices right now and, on petrol diesel prices right now at the retail level, on cooking gas prices right now, the fact is that inflation has become a big worry for India. And that is exactly what we're talking about today. But before we go ahead, let me take it across. The fact is that inflation has become a big worry for India, and that is exactly what we're talking about today. But before we go ahead, let me take it across to my colleague Soumit Sarkar, who is putting into perspective the kind of spike we've seen in crude prices and how they have translated into impacting your and my life currently.
Well, if you see, since December, Brent crude has moved up by nearly 24%, and if the estimations of foreign brokerages are to be believed, then this prices could move up further in the coming time period. However, despite this rise in crude prices that we have been seeing, the price of retail fuel, that is petrol and diesel, has remained unchanged in the country, and this is despite the fact that petrol and diesel prices in the country are unregulated and should change on a daily basis. Now, if you see, petrol prices have remained unchanged since December 3rd, while diesel prices have remained unchanged since November 5th. So what could be the possible reasons behind this? Firstly, it could be because oil marketing companies were already earning a higher gross marketing margin on sale of every liter of petrol and diesel, and now at this point they have decided to take the impact of this rising crude prices on their own books and not pass it on to the end consumers, and hence we have not been seeing this rise in retail fuels, that is petrol and diesel. Or the second reason could be the upcoming election period in the country. Even in past, we have seen whenever there are important state elections or general elections in the country, retail fuel prices, that is petrol and diesel prices, have remained unchanged for a very long time period, despite the fact that Brent crude at that time was on an increasing trend. Now, because of this, the financials of the oil marketing companies will be impacted. Now, along with petrol and diesel, if you see, the prices of LPG, which is used for domestic consumption, has also remained unchanged since October 6th. So far, the only price increase that we have seen is in prices of ATF fuel, that is aviation turbine fuel or jet fuel. Now, that has increased by nearly 7% since December. Now, this rising crude prices also impacts India's import bill, and that is because India imports nearly 85% of its crude requirements. And if you see, based on our calculation, every $1 increase in crude prices inflates or increases India's import bill by nearly $1.9 billion US. And this is based on the FY20 numbers, because consumption at that period was near normal. And if you see the latest numbers, in the first 8 months of financial year 2022, despite only 11% increase in crude import quantity, the import bill has actually increased by nearly 120% compared to last year for the country.
So for how long can OMCs really lay off passing on these high crude prices? To speak on this, I'm joined today by Narendra Taneja, energy expert and leader of the BJP. Aditi Nayar, chief economist at ICRA, is with us on the show today, as is Siddharth Sanyal, chief economist and head research at Bandhan Bank. Welcome to all of you, and thank you so much for speaking with us. Mr. Taneja, let me first get your inputs on how long do you expect, because I know you track the energy sector closely as well, how long do you expect this spurt of an increase in crude prices to continue, and what it really means for India in terms of policy and impact to our economy?
Well, good question, Tamanna. We have seen crude oil prices, are kind of record high, especially if you look at the history of last five to 6 years. What happened the last 24 hours, that's the result of what happened in Abu Dhabi, this attack, drone attack on Abu Dhabi. But even as it is, there is a lot of anxiety in global oil markets over Ukraine. that what would happen if Russia and the United States, they come to exchange, maybe, some other kind of things between them, or sanctions maybe against Russia, then what happened, because Russia is a major exporter of oil. So there's all kind of factors there. But that said, at the same time, the oil markets are also coming out of this Omicron fears, in the sense initially markets thought the Omicron is going to play havoc, and the same way, for instance, what we experienced in 2020. But now market seems to be kind of, have concluded that Omicron, yes, is a threat, but it's not as serious as they earlier thought. So the result is that, they're focusing more on this. The demand in 2022 is going to be stronger, robust, and they are quoting data from several countries, including growth data from China, not exactly the import data, oil consumption, but the growth data, and from several other economies. So the result is what it is. At the same time, we have also seen that, thanks to all this movement we have around the world, against fossil fuels, more particularly, about oil, investment that was required, or that is required for exploration production, that is actually has not gone. The investment required was about $400 billion, but that we have seen that, most of that actually is nowhere to be seen. So the result is that markets expect that in coming months and years, demand is only going to grow. Demand for oil and oil products and petro products and, petrochemicals only going to grow. But at the same time, the supply, countries, mainly male suppliers like Saudi Arabia and Russia, they will be struggling to meet the demand. Russia is already producing at its maximum. Saudi Arabia and a couple of other countries have some more capacity to produce more. So, that's the kind of scenario. But we have seen historically markets overreact. Markets are always full of anxiety. And I think prices where they are today, if you look at the demand fundamentals, they are not sustainable. I think they'll come down. But in the medium term, of course, the crude oil prices are going to go only in one direction. That's of course not. But just to conclude on this, for India is of course it's a major worry, because we are an oil economy out and out. Whatever we say, renewables are doing fine, but renewables are not replacing demand for oil. Demand for oil is only growing, and is only going to grow over the next 15 years. That said, means that yes, whenever prices go up, it's an area of worry for whether you are a central government, federal government, or government at various states, for that matter, whether you are a consumer or you are a business person.
Yeah.
It's an area of worry.
No, so currently, for the end consumer or for transporters or for the general public, we have a mini protection at least for another month if we look at the connection between fuel hikes in the retail level and elections. But it does not save us from a bigger issue that we're facing, and this is why I also have Aditi and Siddharth on the show today. And Aditi, let me come to you on this first. Inflation is becoming a very real worry, and not just in India, it's a global phenomenon right now. But let's speak about it in the Indian context. 5.59% was the CPI for December, and it's still masking the real inflation that people are suffering, or what a full pass-through of crude prices would mean for consumers. How worried do you think policymakers should be right now?
Thanks, Amanna. So let me pick up from something that Mr. Taneja said. I do agree that the crude oil prices globally have sort of run ahead of demand at this point in time. Yes, Omicron is less of a worry, but in the immediate term, we will see a fall in mobility, and we will see a moderate fall in economic activity, and that's what our expectation is as well. We expect the Q4 GDP growth now be a little bit lower than what we thought, and we're looking at a modest downside to our forecast of a 9% GDP growth in FY22, with the impact of Omicron likely to be limited within this quarter and not really spilling over into FY23. Having said that, there's multiple nuances to the question that you asked. At one level, in any case, mobility is likely to be lower for the next few weeks. So even if there were to be price increases at the retail level, that would get absorbed by the fact that the restrictions that we're seeing in some states, which have been triggered by Omicron, will anyways lead to a change in behavior. There's more work from home, for instance, schools and educational institutions are closed in most states, etc. On the inflation side, this is a global worry. Of course, commodity prices had corrected from sort of the November highs back to roughly September levels when Omicron hit the headlines. They pretty much rebounded back in January, and this is what I meant when I said that commodity prices seem to be running ahead of demand and looking more into the future rather than what the current fundamentals of economic activity are in each geography. Now, for the Monetary Policy Committee, because the band that we have for the inflation target is 2 to 6%, they can afford to be growth supportive for a lot longer than many other major central banks. And that's why we do believe that with the current uncertainty that we're going through right now, in the February policy review at least, we're not expecting to see anything. And whether policy normalization can take off in April is going to depend on how quickly things sort of normalize. Our expectation is that they will normalize by the end of this quarter, but will that be enough? Will the MPC be convinced that growth is durable and broad-based and sustainable enough as early as the first week of April to shift focus back to inflation targeting? I'm not so sure on that.
Okay, let me get Siddharth in on it. What is the tolerance level on high inflation? And one perspective to this answer could be from the point of view of monetary policy that Aditi has addressed to some point. But I want to look at it from two other factors. One is clearly a political factor as well. There are 5 state elections coming up. Do you think this is something that the budget will try and address?
It's actually difficult for the budget to do much and to get a result immediately. They can definitely do a lot of things which will be yielding results over a period of time, but nothing something very immediate. So, for example, there is, in case of India, and from a politician's point of view, rather than the overall inflation trend, possibly something like a food inflation or basic subsistence level inflation is possibly far more important than the overall headline trend. Now, for that, if as the government, if they invest in some of the areas in infrastructure and rural infrastructure in particular, I cannot emphasize more how much I strongly feel about the importance of, say, for example, agricultural storage network. So that can actually help very significantly over a period of time in keeping food prices and perishable food item prices in check. And now, given that this particular government has invested very significantly in rural electrification over the course of last several years, I think it's more appropriate to jump into that kind of an area of expanding our agricultural storage and rural storage facilities. But again, as I mentioned earlier, that you cannot achieve any meaningful result overnight on that particular aspect, and you can only get to see the benefit of that. It's more of a journey rather than any knee-jerk positive result. So I think the important factor here is the government need to stay focused, but not necessarily you will see that kind of an approach only in case of this budget itself. On the other hand, you need to keep figuring out where you can provide some bit of relief and support to the economy in general, because as such, at this stage, the most important factor is possibly to boost consumer and business confidence in general, and the government and policymakers in general need to stay committed on that particular front.
Yeah. Mr. Taneja, let's come to the question of how much of a concern do you think inflation is in these 5 state elections? Obviously, it's not something that political parties are talking about at all in their campaign trails, but for the voter at the bottom level, the fact is that inflation has dampened consumer confidence even further. And you have a lid right now on the inflationary pressure that high crude prices will add as fuel to the fire, but eventually it will pass through.
Well, inflation is a challenge for practically all countries around the world. Looks kind of inflation is on the very top of every single debate and television channels, newspapers, conferences in the United States. I mean, 6% inflation in the U.S. is very, very high, and they're blaming the Biden administration's policy to put more money in the pocket of the ordinary people. They say that's the reason, this is the cause of inflation. So, but Biden administration, of course, say their argument is that it's going to help the economy in medium to long term. But in India, you see when you look at ordinary Indians, 80% Indians are getting support from the government. They're getting support in terms of food, in terms of even fuel, if you, look at LPG campaign, and at this a number of other things. So ordinary people, they feel, yes, they may be thoda bahut mehngai, inflation, but at the same time, when it comes to their very basic existence, the majority of people, unfortunately, still, for them, is the basic existence that actually is the most important factor. And there the government has addressed the issue in terms of the food, in terms of toilet, in terms of, fuel for cooking, and medical care, insurance, and all that. So I think their view of inflation is very different from the view of a lot of other people, including those who specialize in economy, and that includes me too. Now, so their view is very different. For the ordinary Indian, opposition parties, like you talked about, opposition parties in Uttar Pradesh, they have made mehngai the biggest issue, Congress particularly. But are there buyers? Are there many buyers of that? Because people understand, yes, there is inflation, but at the same time, they know, as far as we are concerned, our economy is concerned, the government is playing a very, very significant role in terms of government. It chipped them almost like helping them in every single
that's
area,
an interesting
and they're
point.
comfortable with it.
That's an interesting point. I want to take that further, and this is not a political debate, but I want to take that further because it's an interesting point on perception. And Aditi, what we have to look at, and I think we have had this conversation before, when you see that headline figure of the CPI, does it truly reflect everything an ordinary Indian spends on? And we can take into account the fact that we have a fairly robust PDS system. You have DBT right now, so a lot of things are subsidized, especially for the economically weaker sections. But for an average ordinary Indian, where even things like a spend on your SIM card or on Wi-Fi or internet has become, a part of your daily existence. You have now kids going to online school, or the cost of transport, or the cost of anything else except that 1 kilo or 2 kilo or 5 kilo that you get on PDS. All of that has also gone up, hasn't it? And is it now impacting, for example, rural consumption like your top FMCG companies are indicating?
So, Tamanna, I think there's many aspects to this. First of all, our CPI basket itself is based in 2012-13. It's a little bit old, but so it's a little less reflective of current spends than when this basket was designed. That's always going to be the case when you're running an index which is a little bit old. And having said that, there has been a lot of support which the government has provided, especially through free food grain in the last year and a half, 2 years since the pandemic started, and that is something that the CPI index obviously doesn't really adjust for. There's also a lot of things in our CPI basket in terms of services which will not sort of move around in the index, irrespective of whether those services are being consumed or not. Also, there are big ticket items which we don't buy every month or every year even. So we have automobiles included in the CPI basket because that's something that's part of an overall spend, but it's not something that necessarily affects your monthly budget. So there's many ways of looking at it. On the rural FMCG spend, I believe it's more of a base effect. Last year, a lot of people shifted when we had the migration from the urban to the rural areas. That really inflated the rural part of the overall FMCG pie. And people have shifted back. There's a lot of back and forth which is happening. My firm belief is that because the government was very proactive in announcing free food grain early on in the second wave and extending it further, that's actually helped to retain a lot of workers in the urban areas. And that's part of the reason that you're not going to get a very high rural FMCG consumption growth this year. So I think that's more to do with base effects rather than spending power. It's where people are at the bottom of the pyramid, not necessarily what their spending power is at any point in time.
Okay, let me take that perspective to Mr. Sanyal. The impact of inflation at the end of the day on consumer ability to spend, and how we're already seeing that, because you touch any product category across the board, and it has seen a hike in prices, largely because of global supply chain issues and a hike in input costs. Those are now beginning to be passed on from the beginning of this calendar year especially. Do you think that's going to have a further chilling effect on consumer confidence?
I think it has a certain impact potentially going ahead over the course of the next few months also. Aditi summarized some of the points very nicely. I think it's very important to see for the common person, rather than the complete basket, some of the segments which are more like say food items or day-to-day use items, if there we see more volatility, that hurts them more. Unfortunately, to some extent, we have seen that to some extent over the course of the last few months. And given that there is pressure from various fronts, one is obviously the disruption in logistics at an international level, at a national level, at a local level, and an additional degree of uncertainty that is causing some bit of damaging impact to this overall dynamics. Fuel prices is very clearly another aspect. Also, what has made things a little more complicated, unfortunately, at this point in time, is frequent small duration weather disruptions. Now, weather aberrations have also contributed to some pressure on food prices, etc., which is beyond the control of anyone. Now, all these things put together is definitely some kind of a pressure point on the inflation front, but at the same time, if you try to connect it with some of the policy actions that we are seeing or can anticipate going ahead, that even if there is a bit of pressure on the inflation front that we have to accept, very clearly from the government's and policymakers' point of view, including the RBI, the priority at this moment is to try continuing boosting consumer confidence and business confidence, which is just on the mend and has started recovering. I think we'll get to see that over the course of the next several months.
Absolutely. So inflation is going to continue its impact on all of our lives for some time, and as an issue in terms of policy action, may get second slot to the bigger problem of continuing to boost growth, which again has gotten a little bit of a shake-up because of the third wave and the restrictions that have come with it. So this is definitely a space to watch. Meanwhile, crude will continue to hurt in the short term. Thank you so much to all of you for joining us today on this discussion.
Thank you.
Thank you.